So Bitcoin went from 109 for a couple seconds, all the way down to 74, 75,000. It's ripped back to over 100. Where do we go during this cycle? Do you think we go to a million? Do we think you go to 200K? What's kind of your thought process, given that you think there's a lot of money printing on the horizon?
So we got this take from Arthur Hayes. Make sure you watch this video to the end. You'll get his price prediction for Bitcoin from this cycle. Make sure you don't miss it. And with that, what's happening, Crypto Crew? Sean's coming back at you with another cryptocurrency video. Without wasting any time, we're getting straight into it. Bitcoin's coming in around 103.4K over the weekend. Not a lot of price action. Markets are closed. But what you see here, this previous resistance we talked about, the 104.2 range, we talked about this for quite some time. It's on the 2-week chart. And since December of 2024, this is the level that you need to pay attention to. When we came up to it the first time, we stayed around the level 1, 2, 3, 4, 5, almost 6 candles. It's almost 2 months worth of price action from beginning of December through the end of January. Had the retracement, and look where we are right now. If you look at some indicators, the RSI is on the way back up. And as you see here, when we were up here before, we seen that we went from red to green on the MACD. And when the MACD got overbought, you see that we were in the green, then cooling off. We're not even in the green yet and already back up at that price action. So it looks like potentially this upcoming week could be an extremely bullish week for Bitcoin and cryptocurrency. Something to pay attention to. MicroStrategy closed the week around 400 at 399.8. Looks like it could be the same song and dance. The level we want to pay attention to on the 2-week chart is around where we are right now, that 400 threshold. There's a lot of confluence of the charts where if we get a continuation, that's what we want to see to the upside. Right now that MACD is flipping green. We'll see what the next few weeks gives us. It could be a bullish indication, but wait a second. There's something we want to show you. You see this breaking news right here. Fed caught quietly breaking out bond market with $43.6 billion injection. No buyers, no problem. The Fed snapped up billions in treasuries, 8.8 billion in 30-year bonds in a single day, and 43.8 in total last week. The big print has just begun. We see here Josh Mandel is weighing in on this. Take this from a former market maker in the US, 30-year treasury bonds at Solomon. This is a ticking time bomb swept under the rug. We used to talk about the disaster that would ensue if ever there was a missed auction in 30-year bonds. So what is this missed auction that he talks about? This is a big deal. When governments want to borrow money, it issues bonds like IOUs and holds an auction where investors, banks, funds, foreign countries, and others bid to buy those bonds. And what a missed auction means is there aren't enough buyers to take all the bonds the government wants to sell. So a missed auction means that enough bonds were not enough bids to cover the offering, what we just mentioned. Think about that. Where it was not for the Fed, we'll be experiencing a failure to roll over bonds, which leads to default. That's like going to a bank for a loan and no one's willing to lend you money. It's rare and serious, and it will mean the US can't fund itself. So what Josh is also calling for is the big print. And this likely means that the money printer will get turned back on and it's coming to keep the system afloat. So basically, you need to educate yourself on why this is happening. It's starting right now. The big print hasn't been fully enacted as of yet, but when it comes, it'll make markets rip. Arthur Hayes is weighing in on where he sees Bitcoin going for this cycle. Check out what he has to say.
How do you think Bitcoin plays into all of this? And I use Bitcoin as maybe a barometer for so much of global asset flows, liquidity, sentiment. It's just kind of like it is the macro asset now. So how does this play into the chaos in chief? Like that's part of the strategy is just create mass chaos all the time. But also it seems like, you have Besant who is much more measured and like talking to the market simultaneous to Trump, who's maybe talking at the negotiating table.
I mean, Bitcoin is just a reflection of global liquidity flows. And at the margin, that's the US, right? So what do we know is true about financial policy in the US? Doesn't matter what party is in power, is if the bond market volatility gets to a level and that level has been empirically seen to be 135 to 140 on the MOVE index, the policy response is immediate, like the same day. What do we have? In April 9th, MOVE was like, I think, opened at 130, 128, whatever it was, got to 172 intraday. Jamie Dimon goes on CNBC saying tariffs are dumb in his Jamie Dimon way, and
which is not to say tariffs are dumb. He just says every other word except for that. Yeah. Politically correct. He says tariffs are dumb.
And there's a 90-day pause, and everybody except China. Besson gets on television a few days later on Bloomberg and says, "I've got Treasury buybacks. I can, don't with me. I've got Treasury buybacks. Treasury market's sweet. Right?
My guns are loaded."
Bottom market bottoms. And then we rip, right? So, and what happened in September of 2022? Bond market is getting crushed. S&P down 20%. MOVE is at like 140. Yellen or somebody in her staff says, "Okay, there's $2.5 trillion sitting at the Fed reverse repo. Let's change how we issue our bonds so that we draw that money out." And so she did more bills issuance than bonds issuance, and that sucked $2.5 trillion over 2 years out of the reverse repo at the Fed into the global financial markets, and everything ripped. Stocks, bonds, crypto, gold ripped, right? And so that is the number that we should be focusing on. That is, volatility cannot be in the financial markets when you have so much leverage and everybody's running some sort of carry trade. And so that's why the authorities always step in when the volatility increases in the bond market. And because Bitcoin is literally just a reflection of how many units of fiat are there out there in the world, it goes up the most in price. And that's it. It's just that simple.
So Bitcoin went from 109 for a couple seconds, all the way down to 74, 75,000. It's ripped back to over 100. Where do we go during this cycle? Do you think we go to 1 million? Do we think you go to 200K? What's kind of your thought process, given that you think there's a lot of money printing on the horizon?
So I think Trump team is very serious about trying to do their part in rectifying these imbalances. I think capital controls are the way they're going to do it, which is a little bit slower burn. But foreigners are going to react by selling assets because now there's a tax and they don't want to pay it. And so that's going to require printed money to replace those dollars. So if the foreigners aren't going to supply the dollars to levitate Treasury market and the stock market and the property market, the U.S. government will supply it via the Fed, the Treasury, and sort of legislative actions that they can do, like Fannie and Freddie being out of conservatorship or stuff like that, right? So that's all coming, and that money gets printed, and Bitcoin benefits the most out of all the different risky assets that one could own out there. And that's how we get to $1 million Bitcoin. I think that happens sometime between now and when Trump exits office in 2028.